Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about 3 turnaround stocks with 150, 600, and 171% upside in 2024, and I'm actually going to tell you why you should avoid these stocks and not listen to these Wall Street experts, because I don't think they dug hard enough into these companies because they are clearly traps. So with that being said, let's get right into it, but before we do, go ahead and annihilate that like button right now. Subscribe if you are new. Don't forget to go and become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with that being said, let's get right into it. Starting off with the company we've talked about before, it's none other than Novavax, ticker symbol NVAX, which apparently has 600% upside. And yes, I understand they do potentially have 600% upside, but there is a huge trap waiting underneath the surface if you choose to invest into this company. For starters, the company has already tumbled in their share price more than 98% from their all-time highs. But despite this, an H.C. Wainwright analyst actually believes that shares of Novavax could jump from $5 all the way up to $35 during the year of 2024, which would represent a 600% upside potential. Next, let's talk about the huge problem with this company. First off, they actually backed out of a deal with Gavi, which is a non-governmental global vaccine organization. If you didn't know, Novavax developed one of the COVID-19 vaccines, and Gavi wanted to order some. However, Gavi is seeking $700 million after Novavax canceled their contract with Gavi and did not want to deliver 350 million doses of their COVID-19 vaccine. So Gavi is suing based off of breach of contract. Now, it is worth noting that if Novavax wins, this would greatly improve their overall fundamentals and financials because they are already cutting a lot of expenses from their overall list of expenditures. However, the opposite is also true. If Gavi wins, then Novavax will have to pay $700 million, which could potentially, in my opinion, make this company go underwater, meaning that they could go out of business. They would have to sell off a lot of assets just to continue to be solvent in this economy. So I think that is a huge problem surrounding this company. Now, even though, like we said, Novavax is cutting costs, which is a big catalyst for 2024, I don't think it's going to be enough. Now, let me tell you about how they are cutting costs. The company has practically cut their operating expenses in half during the first 9 months of 2023. They literally had a $950 million reduction in expenses. And they also plan to cut another $300 million in full year costs in the new year, which is 2024. So although there is going to be major cost savings and a lot of cutbacks in regards to expenses, I think the lawsuit with Gavi is a more pressing matter. And let's even say that they do win and they don't have to give Gavi anything. This would not mean that the company would magically surge 600% up to $35. Clearly, they would surge in their overall share price because this would be awesome for investors, but there is no guarantee that it would jump by the massive amount of 600%, and that's why I am not on board for this company. Now, they do have another interesting catalyst coming up, and it comes in 2 different veins. First off, their COVID-19 vaccine is unique because it's not a messenger RNA vaccine like the ones developed by Moderna or Pfizer and BioNTech. Instead, this vaccine used traditional methods to develop a protein-based vaccine, which honestly all of them should have been that way. And I don't anticipate Novavax, Moderna, Pfizer, or BioNTech to reach their previous revenue levels from this vaccine. So to offset this, Novavax actually wanted to kick off a late-term study to offer a combination vaccine, which will be both a COVID-19 vaccine and an influenza or a flu vaccine at the same time. So it's a simultaneous vaccine where you get 2 in 1 in just one shot. And I do think that could be a good catalyst, but this catalyst would be projected for 2026. So not really any time soon. And that's why I don't think Novavax is going to be a suitable investment in the short term. term. The risk to reward to me is just not worth it, considering that you are literally gambling if you invest into this company, because they could potentially go out of business if they are going to have to hark over $700 million to Gavi, considering their lawsuit. So I am not overly bullish on Novavax, and I don't think investors should invest into this company because the risk to reward ratio is just not strong enough. However, if you agree with the analyst that believes it's going to increase by 600%, then feel free to do your own research and buy into this company. However, for me, it's just not worth it. Even if this company does end up surging, I would like to practice proper risk management. Moving on to the next company that can jump by 151%, it's JD.com, which has its own problems. JD.com is a candidate to more than double your money in the year of 2024, but the main problem is that this is a Chinese e-commerce company. So this is not a local company, it is a foreign company, which adds a lot of risk to an investment. We also need to take into consideration that the analyst, who believes that they will surge by 151%, actually decreased their price target for JD.com from $73 down to $67. And even though this is a decrease in the overall price prediction, there is still 151% upside left in this company. If you didn't know, JD.com is the second largest e-commerce company over in China, and they have been struggling to rebound ever since China had their lockdowns due to COVID-19. Now, the flip side of this story is that there is a huge potential for this company to slingshot back to their highs, and considering that their accounting ratios are rather good, this could indicate a large upside opportunity for investors, mainly due to the burgeoning middle class over in China, which could further drive significant e-commerce growth and demand for years to come. And what really separates JD.com from the number one largest e-commerce player over in China, which is Alibaba, is that Alibaba primarily leans on third-party sales via its online marketplace to generate revenue, and they normally sell to other companies, while JD.com is a more true and direct-to-customer type of provider. So there is an edge in regards to JD.com, and we also know that their valuation is actually pretty good. JD.com is currently trading at only 8 times their forward earnings. So even when we account for the added risk of regulatory risks, auditing risks, and investing into a foreign stock, historically this company is trading at a very cheap valuation. But overall, I think there is too much ambiguity surrounding this stock, and here's 3 reasons why. The first reason is because they are a foreign company, which means that you are investing into a shell company to even get into this overall company, which adds a lot of risk to your investment. Secondly, the analyst who covers this stock already decreased their price prediction for JD.com, even though they are slamming the table saying that this company could still surge by 151%, and honestly, I don't believe them. And then last but not least, they are not even the number one e-commerce player. If you had to invest into a company, it would probably be Alibaba instead of JD.com. Because why not invest into the best if you are already going to take on this risk of investing into a foreign company? So that would be my thoughts on JD.com. Last but not least, let's talk about Petco Health and Wellness, which has an implied upside between 170 and 171%. Many investors believe this company could actually have a huge turnaround in 2024. And if you didn't know, Petco essentially provides pet-focused products and services, and their ticker name is WOOF, ticker name Wolf. And some investors and one analyst believes this company could surge up to $8 per share, which would represent a potential gain of 170%. Now, the best single factor that we can work with regarding this company is their willingness to open their doors for people who love their pets. And there is also huge demand for the pet industry overall. We don't see any decline in the amount of people wanting to spend loads of money on their pet. And that means that Petco is working with a large market base and a lot of demand, which should cater positively toward their business in the ever-expanding pet industry. However, clearly there is a drawback and why I personally would not invest into this company right now. Petco Health and Wellness hasn't been able to capitalize on this demand, even despite a surge in spending. And when I say a surge in spending, I don't mean Petco spending, I mean consumer spending. So even though consumers are more willing than ever before to spend loads of money on their pets, Petco just hasn't been able to capitalize on this. This is one of the reasons why Petco is adjusting their products to match this value-focused opportunity, because it seems that a large portion of consumers are gravitating toward value-based items. And as they continue to reduce their operating expenses, hopefully the company's guidance will be able to perform better than what it has in the past, because Petco has repeatedly missed the mark on their overall guidance, and that's why I am not very positive about this company. The key for Petco's turnaround in 2024 will hinge on their success of higher margin subscription services. If you didn't know, or if you weren't familiar, Petco ended its fiscal third quarter with 672,000 VitalCare Premier members, which is very good, because VitalCare Premier members are likely to spend more than non-members and stay loyal to Petco as a brand. But even with this increase in VitalCare Premier members from 400,000 up to 672,000, Petco is still in the gutter financially. Meanwhile, they are trying to beef up their digital sales opportunity so they can market more effectively to pet owners to hopefully boost their margins, but this had just not come through yet. That's why I can't conceivably see Petco surging to $8 in 2024 unless a huge catalyst were to happen to this company. And like the others, there are multiple other reasons why I would not invest into this company. They have disappointed on their top and bottom lines repeatedly. Their projections are not good. They have missed forecasts, and I am not taking the advice from just one analyst. And even if I were to take advice from just a single analyst, I would make sure that analyst is extremely prominent and focuses or has a specialty on a particular industry or space. So overall, investors need to avoid articles like this, especially if they haven't done research into these overall companies. Don't just read headlines and invest willy-nilly, because that would be very similar to just gambling. And if you want to do that, feel free to go to a casino, but here we practice proper risk management and we invest into fundamentally solid companies. That's why I think investors should be aware of articles just like this one. But I would love to hear your thoughts down below, and tell me if you own or plan to own any of the companies on this list, and if you think that I judged them fairly. With that being said, don't forget to go and annihilate that like button right now. Subscribe if you are new. Go ahead and become a member of this channel for as little as 99 cents per month. And with that being said, I will see you in the next YT video.